Good weekend, all. Ira Epstein with your Spyder ETF wrap-up, and this is your weekend edition, so we'll be looking at weekly charts, and it is Friday, and we are on the 25th of March, 2022. Wrong date there. We had a day in our office. We were doing major computer upgrades, and it took the whole day. So for those of you that were trying to get to me on the morning Spyder ETF, we began 7:30 in the morning. Literally just quit. It's 5:20 at night, so quite an event, but we're done. All right, so let's talk about the markets. The market's already building in 250-point rate hikes, the next meeting and the meeting after that. The market doesn't seem to care. It is saying that the economy is just so strong, the job growth is so good, that companies are passing on all of their inflation rises. I just got from the gardener at my house, and they wrote a letter. They explained their typical monthly fuel bill would be $2,500. They're estimating it's going to be $4,000. Just giving me some of the examples why they've got to kick up everybody's fees this month to month. And then they're talking about lack of help, which I find interesting. Who doesn't want to do a job in the summer of gardening? So I find that very strange. In any case, what you've got is this is going to go everywhere. I don't know if you were watching today, I think it was Bloomberg, and they were talking about the cost of lunch for those that are going back to the office and what the increases, be it salads, tacos, doesn't matter what it is where you're at. So this inflation number, it's a big number. Now, one of my favorite markets is the mining. And the reason is, let's talk about it. Materials, what better place to see inflation? And you can see what this market is doing. It's just exploding. I thought and was hoping when the market got up right over here that I would have gotten more of a pause in the market than this. You're not getting it. The market's just taking off again to the stratosphere. The pattern is one on the weekly chart of higher lows and higher highs, which is very bullish when you look at that. You've stayed over the 18-week moving average, which is over the green 100 and the dark charcoal, which is the 200. So where's the resistance? What's going to be the Bollinger Band? And you're running on it. Now, you closed the week before under the band, you're back over it. So you're getting that pattern, but it's the Gorilla Glue trade. Now, for those of you uninitiated that are just tuning in, what happens often in Bollinger Bands is you'll get a pattern like this. This is so important. And when we started off 2022, I was on TV all over different stations saying, my favorite trade of the year in Spyders is this one. And I said, I'm looking at a base and I'm betting that at that point in time, I didn't know about Ukraine. I was betting that COVID would end, everybody's going to want to get the supply chains going, and inflation had been picking up. So I said, if we can break out to the upside, and I didn't know if we would or wouldn't because you had just been going back and forth, this would be my favorite trade. You got up, you closed right over the upper band, there too, and this was the breakout. When you get markets that close outside of a Bollinger Band in the top quadrants, back to back, that's a breakout. And measuring where it goes, you have to go to what we call price counts on this. I'm not going to go into that here, but there's still plenty of room, and I expect the market back and forth in there, and you have an embedded reading. An embedded reading occurs when at first you're getting overbought. Overbought readings in the slow stochastic typically take place on any reading over 70. I count more on the daily charts to be overbought or oversold than the weekly. I look at weekly more at momentum than I do is it getting overbought or oversold. But the weekly can and does embed. And when it does that, it's a combination of the blue and the red lines. They're called the K and the D lines, going sideways over 80, at least 3 weeks in a row, and then they're locked in. When they lock in, it tells me that on each deep break in the market, I'm looking for buyers to show up. I don't want to be long any longer. If the red line closes under 79, I go back to the drawing board. You're just, in my opinion, getting going. In KBE, I have not been a fan of the bank index stocks because I'm watching the curve yield, and I've yet to figure out how they're going to make a lot of money if the short-term rate inverts over the longer term. The reality is you lend long-term, right? But you take in the money from your depositors and you're paying more on that. So that hurts this, and that's what this is reflecting. The market will throw in the towel, I think, on that idea and just say, you know, rates are going up. The bank can make money in other ways on that. And I would say any close now over 55.50 is a breakout to the upside, looking for the potential of 59.34. And I'd be wrong if it gets up there and does that, and whatever the current low is, it takes that out again. In XLI, bullish. Higher lows, higher highs, industry's able to pass on everything. If you're looking at the Fed districts, you're looking at manufacturing service sector PMIs. We had a series of them this week. They were all to the upside. So higher lows, higher highs until you get back under this 97.01 level. I'm looking for the potential of going back up and challenging these highs in the 107.40 area. In XLE, what can I tell you? You know, this is a Ukrainian situation. Now, the Saudis are suddenly saying to the U.S., we might need some help with defense. Now, let me think about this. If Biden had the guts, you'd say, now, let me ask you. I asked you to help me with oil, and you didn't really do me a lot of good. So, you know something? Defend yourself for a while. You've got to put people in their place. And if you don't do it, you get stepped on. And I know the world's a big place and you got to be friends, but you got to say those things and then hold the hand out. But the next time you ask for something, they don't give it. That's a different game. You owe nothing. So say it. Get them to the point where they give, they put out the oil that we all need, and then help them with their defense. What's wrong with that for a policy? In SPY, this is an important move. You're back up to the 18-week average of closes. Are you going to be able to do anything with it? That becomes the big question. I have been looking for a rally. If you think you're going to run here, are you telling me you're going to go up for contract highs? Because that's the logical next resistance in the market. I frankly don't see it because I've been around long enough to know that raising interest rates the way that everybody is talking, I'm talking the Fed members, not the analysts. If that's what we're going to do, I've yet to see that. I'm not saying they can't dance around a recession, but it's a trick. This economy is pretty darn strong. So I think that, I'll always bend to them, but I'm expecting more resistance to show up right here. On the emerging markets, you can see the problems. Obviously, the problem are interest rates and inflation. It doesn't do well for this. What you really had was a market that had closed a number of weeks, two of them under the band. It came back, and as you can see, the battleground's the 200-week moving average. Support will now be the Bollinger Band. And if you can move up, I think the better short sales lie up here at the 18-week and the 100-week average of closes. In GLD, I'm in the bull camp. The market has, with this week having an inside week, higher lows, higher highs. What you don't want to see is taking out this week's low of 176.87. If you do, you're probably going back to the 172.79 level, the 18-week average of closes, maybe even the 171.13, the 100-week for support. If it can pick itself up, the next spot, 185 on the upside, about $2.5 higher. In the gold miners, they are still good. Now, this week in my live webinar that we held on Thursday, one of the questions that one of the people had was they were concerned that the gold miners weren't running with GLD. It's doing a fine job, but I pointed out then, and I'm going to repeat, you're at the upper Bollinger Band. You're in a big resistance area. You are up 4% for the week. Gold is not running on the fear that, like it did here when we first got into the war in Ukraine. That's past. Now it's got to run a little bit on the war, but more on the inflation news, and that seems to be what the market is doing. ARK got its bounce, and it's lost its bearish embedded reading. For the bears, and I was a big bear on this stock, it's time to walk away and say, maybe China's idea of loosening of money, getting the economy going again. They've clobbered these markets, and she's a heavy investor in some of these Chinese areas. She had been selling off during the year. I was watching what was going on, but it appears to me that's it. Now, another reason that this stock went down is she's heavily invested in tech stocks, right? High interest rates hurt that market. I've got a reason to be out of shorts. I have no reason to be long on this chart. There's a difference between the two. Amazon, I don't ever want to bet against Amazon in the current environments. You still have COVID. People like shopping on the internet. Let me tell you my own experience. I don't know about yours. I don't remember the last time I went into stores to physically look at products. I do so much of my shopping now on the internet. That's not to say I shouldn't go into the stores, but I simply don't. I do everything on the internet today for the things I want. Maybe I'm just the wrong type of guy for those stores. But lower low, higher high, you have cleared the combination of the green, the 100-day average, and the 18. They came together. If you're going to pop, maybe you can get up towards the 3,600 level again in the stock. Apple out of the downtrend. I actually should have had this arrow pointing up. Oh, I did. I just forgot to get rid of that. I'm sorry. Lower low, higher high, trading range market. I can make all kinds of arguments to get back towards the 182 level, but that's near the highs of this market, and I think that's going to happen. I still think this is a $200 market before it's all said and done. Tesla, it looks to me like the correction is finished, over, done with. You're in an uptrend, higher lows, higher highs, and this is the first week you're back up and over the 18-week average of closes. Momentum was turning up, it's turned up now. So you'd have to get back under that low to convince me it's anything but a market that wants to work higher. Next target, wherever that upper Bollinger Band comes in. Bearish as can be on TLT, BND, AGG. They're riding the lower Bollinger Band. I still have traders in this in my morning subscriber videos. That's my news, and that's where you're at. Now, I keep talking about my morning spiders. Let me tell you the importance of them. At 9 o'clock each morning, I'm pretty much done getting all the government reports. They typically come out, as you know, between 7:30 in the morning, that's most of them, to 9 o'clock, and I'm giving Chicago time, Central Time. It comes out with all kinds, but you want to get that out of the way. These are some of the markets that I cover. I rotate. I ask you all the time what markets you want me to cover, and I will rotate them in the morning videos. You're going to get a mixture of fundamentals. You're going to get daily charts. You're going to get weekly charts on the weekend because each Saturday it's all weekly charts. So tomorrow morning I will sit at my computer, get this done. I will be doing bonus videos that you get. You get the webinars with it, things that the public doesn't get into. I'm a seasoned pro, done this 50 some odd years now, have owned my own stock company. So if you're looking for somebody that gives you a different perspective, all about trading, all about the charts. I may have an opinion on the market from my own point of view. Believe me, at the end of the day, I'm a chartist, and that's all that I want to be. Then all you need to do is go to our website. Under the keyword, there's one word there, research. It explains everything. Take a look at it and decide if it's for you. In the meantime, I'm Ira Epstein. Have a great weekend.